everybody, it's Omar. It is February 17th, 10 a.m. And this video is gonna be quite long. So just give you a heads up. But my advice is to watch it all because I'm gonna try and be somewhat detailed and try to answer all your questions. And a lot of the questions I got, I think a lot of those answers are answered in a lot of the videos I already post. But I'll try to review a lot of those today. I got some good questions. All right, so what I want to do is review the trade. So first, what I'll do is I'll review the trades, and then we'll build a watch list together. And then in reviewing the trades, I'll try to answer your questions. I'll try to be as detailed as I can. So I'll give you a little background on my journey in trading. So about a year and a half ago, I knew nothing about stock trading. Absolutely nothing. Not one thing about stock trading. I've been like, I flipped houses, and I had a car dealership and a barbershop. I also had a regular job. So, I had partners in businesses and I invest in people. And that's sort of what I've been done pretty much, for the last 10 years. But I have a friend though, who one of my best friends who, for a while wasn't working for years, and I didn't, and he was making his money in the markets, and I'm like, what do you do? Like, you buying and selling stocks? Because that's all I knew. And he said, no, I trade options. I knew nothing. I didn't even know what that meant. And then in my mind, I'm like, well, because he's making a great living trading options. I was like, well, I'll give you some money and invest it and flip it. And he didn't seem too comfortable with the idea, and over time, I started thinking about it more and more. And I was like, you know what? I'm going to try and learn this stuff. So initially, I tried to learn how to trade options. In learning how to trade options, I purchased a course. It was like $200 from this, options person. And in learning options, I would stumble across YouTube, and I would stumble across a guy named Tim Sykes, which everybody knows who he is. And I found his style and the penny stock world sort of more appealing than options trading. And options seems to me too complicated. But when I brought it up to my friend, he's like, "Oh, it's a scam. Don't trade them," and da 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 da. But I didn't listen to him, so I just started watching all the Tim Sykes videos, and that was my initial learning experience to trading. YouTube videos is more than enough you really need to watch to kind of get a sense of trading. I mean, he doesn't give you detailed technical analysis, but the things that he says are true in the sense of support and resistance. It really is. Stock trading is really all about support and resistance. He doesn't give you too much detail. That's why I think most of his students fail. You have no idea how many of his students have hit me up all broke because, and all he does is just like a herd, get a new set of people, and they spend insane amounts of money, and they don't get a lot of proper education. That's just my opinion. So I basically taught myself watching all of his videos. Then I have Warrior Trading, Cameron Foose. I just watched all their videos and just kind of pieced it all together. And then when I would hear notes like if Tim Sykes say something like about level 2, I didn't know what level 2 was, so I go look it up. And just learn, just keep teaching myself. Investopedia teaches you all this stuff. I mean, everything that you want is on YouTube, literally. Anytime I would hear a word like, the first time I ever heard the word VWAP was in a video I was watching by Tim Bowen for stocks. He was using like stocks to trade, and he posted a video. I was like, what the fuck is VWAP? And I didn't know what it was, so I looked it up. And that's how I learned how to trade. I think my videos cut it all down because I talk about all this stuff. And if you notice on my channel, when I initially started teaching, let me go back. So if this was my very first video. This is the very first video I ever posted about my stock trading journey, right? And if you notice in my video, I talk about like, I give you, watch this video, man, because it's good. I mean, I've progressed since then, but the foundation of it's still the same. Like, I talk about what's momentum trading, and I talk about buying breakouts and all this stuff. I mean, all the stuff that I use today. What the difference is that I really stopped using these indicators. I don't really care for them anymore, to be quite honest with you, because they are lagging indicators. So I don't feel like they're really necessary. Not to say there's not value in them, because there's value in them, but and you can use them if you want to. But I just learned to just focus on support and resistance, because what happened was, for me personally, I started getting too dependent on the indicators, and sometimes it would cloud my judgment instead of looking at the price action and looking at the chart. So I started deviating from them, you know. But watch this video, Momentum Trading for Beginners. If you go to my channel, I made it real easy for you. You just go to the playlist, and on the playlist I got this Momentum Trading Fundamentals. If you go there, it's a whole list of videos, a whole playlist where I teach you guys, you know, it starts with the momentum trading, and then it's like how to build a watch list and how to create my custom scanners, and you know, how to create everything, how to use the on-demand for virtual day trading. And then, you know, I go over videos where I talk about short selling, and I use like actual example charts to really talking about how to you know, trade all these different strategies. This is great. I mean, if you watch this catalog, you should be real good. It gives you a lot of detailed knowledge and how to use everything, how to set everything up. You know, guys, the thing is that I watch hours and hours and hours of videos, man. You gotta put in the work. You know, you can't be lazy. You know, this young generation, y'all want everything now, and y'all don't want to work. Y'all don't want to study. Y'all don't want to do anything. You just want everybody to give you things, and that's not how it works, man. It's not real life. You gotta put in the work. So watch the videos, man. You know how many hours of studying I did, like just to piece it all together. And then all I'm doing now is just simplifying it for you and cutting down your learning time, you know. So that's kind of how my journey's been, and I've made a lot of money in the market with no guru. I did join Cameron Foos's chat room for about 2 months, and I was like, you know, I felt like I'm no disrespect to him, I just felt like I'm a better trader than him. Like, I just feel like, you know, he wasn't really providing any teaching, or, you know, I just feel like, you know, he's not really a teacher, you know, and he's not really, you know, focused on developing traders. At least maybe that's changed, but when I was in the room for a couple of months, everybody was real cool. I just didn't feel like it was for me, and I feel like after watching all these guys, I feel like I know what I'm doing. I'm good. I'm doing a lot better than most of them, to be quite honest with you. And you can't even verify if they're really trading or not, to be quite honest with you. They don't teach, they don't review trades, they don't do anything. You just watch them for a few minutes. You know, they stay on, they make a couple of trades, and maybe they don't, and then they're gone for the rest of the day. It's not, I don't know. I just felt like there wasn't real no value, but I was curious, so I'm good with not being in a chat room. Maybe one day I'll change my mind, but I don't know. Right now I'm good. So that's my journey. I'm sorry. I know I spent like about 5 minutes talking about all that, but just to give you some overview. Now, the key to trading, guys, is just simply mapping out support and resistance levels to potentially make trades off of. So one of the questions I got was, Omar, how do I know when to pull the trigger? The problem is, and this is what happens with a lot of traders, with everybody, is that you're thinking about losing money. That's why you're not pulling the trigger. You're thinking about losing money. If you're not willing to lose, don't trade, because you're gonna lose a lot. You know, the key is to have a clear strategy to exit in the event the stock goes against you. So the first thing you got to think about before you make a trade is, what are you willing to risk? What are you willing to lose? You know? So if you're looking at a trade, for example, and let's say this was a stock on my watch list, VII, that I had yesterday, and I said I'm not really interested unless this stock got up to that 64 level, if the market opened, and then if it broke above it and held, and I would take it long. Otherwise, if it got close to this and it couldn't hold, like let's say it got up to like, let's say 62 cents, it held 62, pulled back to 59, gapped up and held 61, then it's forming a lower high. So I would take a short risking 64. Now, let's say I was gonna short this stock. Let's say it got up to 61 cents, and I'm gonna short it. The first thing I'm thinking in my head is what I'm really to risk to lose. So I'm not, let's say I don't, like people use percentages, I don't use percentages. For me, I use actual money. I said I'm not willing to lose no more than $500 on a trade. So I'm not gonna take the trade if I can lose more than $500 if it goes against me. All right. So that means I'm not buying no more, let's say, than 10,000 shares on a position like this. Let's say you're not willing to risk more than $100. So I'm going to say I'm going to buy enough shares that if it goes against me and I lose, I'm not losing more than $100. That's the first thing you got to think about, is how much you're willing to risk to lose. All right. Once you got that in mind, you got to clear entry. So let's say the stock had gapped up. It got up to like 62 cents, pulled back, formed a lower high at 61 cents. All right, so now, or 60 cents, whatever, I'm gonna stick to short on 60 cents, risking 64. If it breaks above 64, I cut my losses. That is risk management. That's what I teach you guys. That's why I tell you, you gotta have your support and resistance lines. Now, in this stock, I told you, because the reason why we built this watch list, right, on after hours on Thursday, this stock was gapping up. So I put a trend line here and an alert at 64 cents. But I also said that you see how the stock had sort of pulled back and formed this support level 51. So I said 51 is also a key level. I didn't put an alert there, but I said, you know, technically, if it held 51, you could take it long or short it, risking, you know, 51. Now, what happened was when the market opened, this didn't have a lot of volume. Normally I would stay away from this, but it is shortable. So in theory, what you could have done was said, hey, if it breaks below 51, I'm going to short it, risking 51. Or you can risk the high of day and held it to say, I'm going to risk 64 cents. So you would risk, you know, 64 to see if it's going to get back down to that low of 35 cents. Okay? All right? So that's how you kind of decide how you're going to take the trade. And in here, in theory, this is the 50-day moving average. Look at this. It broke below the 50-day moving average. It broke below VWAP. It broke below the 200-day moving average. It's all very bearish. But if you're looking at the candle here, right, it opens up. The stock market opens, hit a high of 52, a low of 46. It closed at 51, right? But look at the next candle. The bears, this is the body. This means that more people are selling than buying. And it's below that 50-cent candle. And in that next candle, it hit a high of 52. Hit a low of 42. It closed at 46, and you could have took a short at 46 cents, risking 51 cents, and just wrote it down. That is where you have the psychology to say, all right, I'm gonna pull the trigger because I know that I'm risking 4 cents, and I'm gonna see it's gonna go. Like it formed a lower high here. See? And here, look, it keep going down. You could have just got in, and you know that your risk management. That is why a lot of people don't take the trade, because they don't clearly have a strategy to get in the stock, you know. And you can see this stock got down to 41 cents, and it held 41 cents. And when I talk about buying the dip, now this is not the best example because this stock didn't have it had 2 million shares traded, but it, kind of like dead after this. The volume finally faded. It was everything happened in the first 15 minutes. You see how the stock gaps down, and I'll give you better examples, but you see how it's selling off, and it finds this clear support level. You see the volume coming in. That is how you know you get a clear trend reversal. Obviously this is not the best example, but if you see, hey, you know what, it stopped at 41 cents. The next candle here, oh wait a minute, it's not going down any further. This is a momentum shift, and what happens is, when the stock is going down on the time it sells, you see lots of red prints. You see the volume bars are more reddish, right? So if you're looking at it here, here's the green. Look what's happening. Right here, you see, right? Like, here's the volume increasing, right? So, all right, so you know it's more selling. And then what do you see? You see the volume going up, and that's how you know there's a clear trend reversal. So that is how you could kind of get a sense of where the volume is heading, okay? And that's how you can buy a dip, all right? Now, this is not the best example because this stock was, not in play. But I'm just trying to give you examples, all right? Now, let's... excuse me. Let's go through the other stocks. Next, MBRX. MBRX, we mapped our clear support and resistance levels on Thursday, right? So these were the support and resistance levels. Now, let me use the big chart so that you guys... can see better. All right, so these are the clear support and resistance levels that we had mapped out on Thursday. So Thursday's high was here, then we had a support level here at $3, then another one here at $2.85, right? And then another one here at $2.50. So these were the entries, and what happened was, pre-market, this didn't even get a chance, and pre-market, this thing just completely tanked. So there was some movement up here, but no volume. And then it just completely tanked because there was an offering. And I think that's what caused it to tank. So, it happened really quickly, but at that break below 250, you could have shorted. Now, let's say pre-market, for whatever reason, you had the ability to trade this. Which I normally don't trade pre-market, but the volume was there. Now, let's say you see, all right, it tanks. And look, what's crazy is that, I use Fibonacci. It retraces right at that 61% level. Quickly, All right, so you see this form a higher low here at that 236. Now in theory, and this had 35,000 shares, so the volume was there. In theory, if you had the shares to short, because you got to be able to locate them, in theory, you could have taken a short to say, hey, it's forming a lower high here, it's starting to sell. I'm gonna risk off this 236 level in this next candle because it already hit a high 274, so I'm risking 2 cents. Or I'm gonna risk that 250, okay, off that previous support level. All right. Now the next thing you got to think about is before you make the trade is, all right, what am I willing to lose? So if the answer is I don't want to lose no more than, let's say, $200 on a position, then you don't want to take. You want to make sure that you only buy the amount of shares you're willing to lose. That if it got up to 250, you're not losing more than $200. That is kind of how you gotta decide how you want to trade, and that's risk management. All right, you gotta have a clear support and resistance level to trade off of. All right, and then this thing tanked. Okay, it tanked all day. It tanked, and it found a clear support level here. So if it finds a clear support level here, right, you're looking at the volume, right, to potentially buy a dip. And what happens is, right, so you notice here there's literally no volume, right? So what you could do is you could put a trend line literally here, right? And what do you see? What happens is it's found this clear support level, the market opens, and all these short sellers have to cover their position, so it causes an artificial spike, and you see the volume just pop. So you know that there's volume there to drive the price of the stock up. You see on the level 2, you're gonna see bidders coming in, and they're just gonna keep getting, the sellers are asking and the buyers just keep buying. On the time and sales, you're gonna see green prints just going through, and that is telling you that the price of the stock is going up. You also, what you can do is you can add a trend line. So you see the trend going up, and you just buy the trend. So if you see this trend, as long as it's in the trend, you are taking it, and then you just in long. And once you see the trend reversal, you just sell your position, and that's sort of how you trade. That is sort of how you make the trade. And you can notice here when we put our little trend line, you see the volume here, and you see it starting to fade here, right? This was the high, and now you're seeing, all right, that it's starting to fade. So you can, see that it's decreasing. Oops, and sorry guys. You see that it's decreasing here. So you know that the momentum's shifting, and you want to sell your position. And in theory, if this was the high at this point, sorry, this thing is just acting up right now. So if you see that this is the high at this point, and I teach these in my other videos, there's the high day right here. It's forming lower highs, so you can then short it, risking off that high. And you see the volume, shifting, and there it is. It's all red prints, and you could have took it short. All right, that is how you decide. Like, that's how you look at price action. Okay. That's how you look at price action here. All right, let's look at the next stock, KODX. Now, this wasn't, not every stock on the watch list is going to be great to trade. You kind of just gotta kind of map things out. The next stock up is KODX, Kodak, right? And these are the alerts that we set. I had that. Remember, we put this on the watch list because it held its highs Thursday. It had this momentum, and Kodak on the yearly. Remember, it had this run where it got up to about $10. Remember, we had looked at this stock, had this crazy nice move, and now it's up on an upward trend. I said I didn't know that if it was gonna get above that 200-day moving average, and that's what we were looking out for that day. It didn't, but it just sold off. It just tanked. So if we look at the stocks, right? We had a trend line set. A trend line alert set at the higher day, right? And what happens? Market opens. We had another trend line set at 685, one at 660. So in theory, look what happens. It happens fast, but the market opens. First candle here goes to hits a high of 685, low of 680, close at 685. So right at that resistance level, right? We set a trend line there. In that next candle, it opens at 685, hits a low of 660, closes at 660, which was what? The next support level. Once it broke that 660, you could have took it short, but this happened really fast. This happened really fast. And you notice here, look what happens. It gets up, and this is very choppy. I mean, I wouldn't even look at this because it was just so choppy. But you see it kind of right sideways, and then now it forms this clear support level here, 655, and you know you have that resistance level, which is now that support level that was previous support, now it's just resistance at 660. Look, but once it gets above a 660 and holds, you see this candle, that means that there's a trend reversal coming, and you're gonna see buying coming in. And you could have took it long at 660 because you're seeing the volume starting to come in, right? There was no volume really here. You know, you can see here's where it was sort of green. So you notice, right? The volume is fading. And, you know, it's kind of starting to hold that 660. And then look what happens. It just starts moving. And then it just takes off, you know? And that's where you can buy the dip. That's what I talk about when you buy the dip. It has a clear support level. And you see the volume starting to come in. And, you know, you could have gotten at 660, all right, risking 655. And look, you got up to 695. And when you see that candle, again, that usually means a trend reversal. And then it kind of fades down. So that is, you know, that is sort of how you look at it. Now, you know, these stocks were real choppy. They weren't great. But I just wanted to show you how, and this was like, when you see this, you just completely stay away, you know. This, you know, we had on our watch list because, you know, it had a big move the previous day, but look at this. This is sort of garbage. Now, in theory, when the market opened, look what happens, though. Even though this is garbage and I wouldn't, you know, we had a trend line at 921. We also had one at 890. The market opens, look what it does. Gaps down, right, gets to a high here of 920. Pulls back to a low just very quickly of 886, all right? Closes at 895, so it's above that previous support line. And look, it's just kind of just fading off that. Now here, if I would have saw this, even though it's choppy and, you know, I would have taken a short, because what I'm saying is shit, it can't break above that previous support level of 920, resistance level of 921. So in this candle here, I see that it hit a high of 920 and it hit a low of 909, closed at 909. I take it short, risking at 921, and you could have just took this all the way down, you know? And look, it touched that previous support level of 880. Why is this happening, guys? Because we're mapping out key support resistance levels. That's how other traders are identifying where to get in and out of stocks, you know? And you see 880, right, on Thursday was a clear support level. And look, even though this is choppy, shitty stock that I wouldn't even trade, but look, it can't get below 880. It did for a second here, but 880 seems to be a clear support level. Now, these are shitty stocks. I wouldn't have traded them, you know, but there were a couple of good ones on our watch list. We'll talk about when we get there in a couple of seconds before we build our watch list. And I'm sorry, I know this video is so long. So another stock on our watch list was FTR. Now FTR, again, unfortunately, you know, a lot of stocks on this watch list were somewhat duddish, you know, but I'm just trying to show you that you have the areas of support and resistance to potentially make trades. So this was what we saw on Thursday, and we had mapped out our support and resistance levels. The high was at 903, right? And we had a support level here of 9. Oh, let me change it. Let me do the 5-day 1 minute. Let me see it better. Okay, here it is. This is better. And we had our support level here of 903. Okay, all right, which was the previous day's high, and we had so that was the resistance level. I'm sorry, and the support level here 874, and then we had another one 860. Well, the market opens, right? The market opens, and this thing pre-market got up to a high of 919, sells off when the market opens. So in theory, right here where you got this pop, right, it kind of holds. This is a 20-day moving average, a 50-day moving average. It kind of bounces off it, comes up here, gets to a high. This thing is kind of deciding where it wants to go at that 902 level. You notice here it starts popping, it's kind of consolidating, and you know, you see that this is kind of, it can't hold VWAP here. So in theory, right in this candle, you could have took it short, risking 903, and it got down to 876. And look what happens here, guys. 874 was Thursday's support level, but look, you put a trend line here, and you notice, okay, it's forming a higher low, and that is telling me that, look, it pops back up, comes back down, right? But it can't break that 878 level, and look, it starts going on this trend run. Now, what I tell you to buy the breakout if it holds the higher day, right? Now, in theory, if you saw this here and you're saying, hey, you know what? It's tested 878. 874 was Thursday's, so this was a clear support level on Thursday, but it's formed this higher low. So in theory, you could take off. Now, this is, a choppier stock, but other traders see this and they see it, and guess what? It starts moving. And what did I tell you? Thursday's high. Now, in theory, you could have taken it long here, okay? Risking off that 874 level, because you got a clear support level 878, and your exit strategy is probably that high day. You want to see if it's going to retest that 903, and gaps up, gets all the way to 903, okay? Kind of sideways consolidation, and then it breaks above it. Now, I always tell you, don't buy the break. Wait to see if you're going to get a retracement. And you could have, once it broke 903, right in here, it forms a low of, it closes at 905. So in theory, this is that higher low, even though it's hard to tell, because in that next candle, you see it start getting some volume. And look, if you notice here, look, when it broke the higher day, look what happened. You got that huge volume spike right here, okay? And that's telling you, hey, look at the volumes coming in, and that's going to continue to drive the price of the stock up. So that is your clear level where you really, literally getting in, risking 903. You're getting in, risking, or that right here, that 902 level, okay? Because that's a clear support level, and you could have just rolled this up, You could have just rolled this up, and you see that it's above the 50-day moving average here, and it's just riding a trend. And when you see a trend like that, all you do is just put a trend line, and and you just literally just stay in as long as it rides the trend, because the trend is your friend. Hit a high 938, and then you get the sideways consolidation, and now you see that it's it formed a lower high and it can't break above, so you get out. And that's kind of how you make the trades. All right, that's how technical analysis works, guys. That's how technical analysis works. Look at GoGo. All right, these were choppy. Unfortunately, I can't lie, these stocks weren't great. UAA was amazing. That was really like the big win, if you took that trade. So, right, this was Thursday's key support and resistance levels. Market opens, and again, unfortunately, I'm sorry guys, these were all choppy, but I'm proving my point that support and resistance plays a huge role. Look what happens. The market opens, gaps down for a quick second, kind of doesn't know what it wants to do, gets above that yesterday's support level 992. Look, and it's kind of holding it, and then kind of rejects it, kind of holds it. And if you notice, all right, look, it can't break below the 992 level, so obviously you would have to be watching this, and this is not the best example because there's really no volume. I mean, you should just stay away from stocks like this. But look what happens. It can't break below, really can't break below that 992 level that we had set yesterday, and look what happens. It starts taking off, and you could have bought it, and it gets rejected a couple of times in that next $10 level, but look what happens. Once it holds $10, I told you really don't buy it unless it breaks and holds 10.06. That to me would be the clear safe entry. I said that when I made the video Thursday. And look, it gaps up, fights, it's fighting. Bulls and bears are fighting at that 10.06 level. And sure enough, it breaks 10.06, but it pulls back. And look what happens. When it holds 10.06 and it starts getting above the 50-day moving average, people start buying. And sure enough, look what happens here. It pulls back again. Can't break that 10.06 level, which was the high. And you take it long. These are, look at this. This is dog shit stock with shitty volume, but what's happening is here, because you have the key support and resistance levels mapped out, you could tell that this is what people are using to identify a buy point or sell point. And that's all it is, guys. That's all it is. Now, UAA, I'll just use this last stock as an example, and then I'll build my watch list. Because this is a good chart. This has a lot of volume, and there's a lot of buying and selling. So yesterday's high, right, was 1850, right? Because after hours, when I made the video, 1850 was the high. Remember, I say buy the breakout if it holds 1850. Otherwise, you short, risking that level. Well, look what happens, right? It got below it. It got to the 1807 level. Look at this. Market opens, gets to a low of 1805, and literally you saw that volume coming in. You could have, in theory, right in there, took that trade, risking that. So you could say, hey, you know what? Because the next support level is 17.99. I'm gonna take a stab going long because there's volume here, and I'm gonna risk 17.99, which is what, like 9 cents, 8 cents. And look, it just breaks above that 1826, which is the next level. Look, it opens at 1826, high of 1833, low of 1818, closes at 1832, consolidates, and you can see there's more volume coming in, and you could have took it long. Now, if you wanted to be safe, you could say, hey, you know what? I'm not going to trade this unless it breaks higher day, but I see the volume coming in. And look, at that 1850 level, look, it really can't break above it. Then it breaks above it, but I tell you, always be careful. You want to see what's going to happen. So in that next candle, right, in that candle breaks out, it's a high of 1864, a low of 1852, but it closes at 1864, and in that next candle, it hit a low of 1856, it closed at 1857. So in theory, you could have taken it long right here, okay? You could have taken it long right in this 1856, 1857 level, risking the 1850 in theory, if you wanted to, all right? Or, you know, and then it just kind of got up to 1875, and then you took a big dump here, and then you see it bounced off the 1850. But what would have been great is, what you're saying is, and this is kind of what you got to know, you're going to say, hey, wait a minute, this stock was $15, and it went to $18. People are going to take profit, right? And what this could be was an artificial spike of short sellers risking 1850, right? And what happens is they panicked because they thought, oh shit, it broke out, maybe this continues up, so it causes this artificial spike. And then, you know, people take their profit, and then now buyers are willing to take the profit. So right at that 1850, you could have took a short risking the 1875 level or the 1862 level, which are the lower highs. Once it broke below 1850, which we know yesterday was yesterday's high, that's a strong area to take a trade off of, and it's a psychological resistance barrier. Once it broke below 1850, you could have took this bad boy short. Now I missed this. I was busy working, so I couldn't even look at charts. But me personally, this would have been a great entry. And this thing completely tanked. You know, it got down to that next support level, 1826. Look at that, couldn't hold that. Look, bounces right off that. Kind of consolidates off that level, and you know, gaps back up. These are short sellers covering, so it's causing that temporary spike. But look, it's holding that 1826 level. Why? Because that was a support level we placed yesterday. It was a key support level. Look, and once it couldn't hold that, you see, this is the 200-day moving average. It got rejected there. And look, once it broke 1826, you could have took a short. Looking at that next level of 1807, but broke right below it, 1799, and it found support at 1781. You know, gaps back above it, gets back to that 1807. But look, it's in that channel, and it can't hold it, and you could have took it short again. Now, this is why I tell you trade the stocks on your watch list, because you have key support and resistance levels to potentially make trades off of. And if you notice, it kept rejecting those key levels. So you clearly would have had entries to go short. And look, it's below the 200-day moving average, which is, like, I love looking at stocks that get rejected by the 200-day moving average, and I take shorts based off them. And that's a little more advanced, but I love to do it. You know? And here, look at that momentum shift, right? Let's look at a chart. As it's going long, it's above the 200-day moving average for the most part. And when the momentum shifts, now it's below the 200-day moving average. You know, can't get above it no more. All right, which is pretty remarkable. And look where it closes at, that 1735 level, which was another key support level, which was yesterday's support level. All right, and this is a 5-day 1-minute chart that I'm looking at, guys. All right. And that's why it's important to map out support and resistance levels. All right, super important. All right, all these stocks, that's why you got to review them. You know, look at the key support and resistance levels. We had SQ was another one that we had on our watch list, right? We had mapped those key support and resistance levels Thursday, and look what happens. You know, market opens, right? SQ had some pre-market action. You know, got below that support level of 1398. Market opens, it kind of holds it. Can't decide where to go, and that next candle gets above it. And look at this. You could have took this long. right there at 43.98, risking that level. Gaps up, gets rejected at that next resistance level, pulls back, breaks above it, holds up, and look at that 45.90. Look what happens here, guys, though. You get that sideways consolidation, and sure enough, you know people are going to take profit, and right in there, boom. You know, you got to see the trend. The trend is changing. You see it's forming a lower high here. Gaps up, pulls back, holds 46.63, but look, it can't break above that 44.90 level, and this is where, when it breaks that 44.85, you could take it short. And look what happens. It gets down to that 43.35 level, kind of holds it. This is previous day's close price. Gaps up again, but you know, it's just sideways consolidation, and eventually it breaks the 43.35, and boom. And it gets to what? The 43.98 level. So because we mapped out our support and resistance levels, we have key entries, you know, and you can see that, you know, once it broke that 43.35 level, it just got it just tanked. Look at this. Couldn't get past it. You could have took it short here. And this is big moves, you know? That's why you got to map out support and resistance. Now, the one I put on yesterday morning on Twitter was Apple. Wasn't on my watch list initially. So when I got back to my desk, this was the trade I made. You know, so I saw the sideways consolidation happening, right? It broke out above. That was the previous day's breakout level. It's at 1726. Right, we had mapped it out, right? Got to that. Oh, I mapped it out. This was pre-market, and I saw that. All right, and I saw that it got to a high 1758, but it was in this sideways trend. So I'm like, which way is it gonna go? All right, and look what happens. Okay, I saw that it was sort of like, you see, both the volume, bulls and bears are fighting. And I saw it kind of gap up and then pull back, and I saw that it wasn't going to get back to that 1758 level. So I thought, you know, people were going to come in at that rejection of the 1726 level, and then I took it short. And I got more confident as I got the pop with the lower high, and I just held strong as it got down. Now, when I knew to get out was that I saw, let me zoom out here. I saw that it was forming, like, I see the red and I see the volume, right? I'm looking at the volume bars, and then I just saw this quick brush of volume coming in, and all I do is I put a trend line here, or I just see that the trend is reversing, and I covered right into here, okay? And then I took it long, because what I expected was that it was going to run back up. More buyers were going to come in. Short sellers were going to cover their position from that, risking off that high of here, and that more volume. And I saw the volume coming in, and I just took it long, risking off 1775. And sometimes you got to give the stock a chance to see what it's going to do. And it just kind of rode this trend. I just saw this sideways consolidation, and it, you know, dipped here for a second below it, but I wasn't too worried. I kept waiting to see what was going to happen. The volume kept coming in. And once I saw it get above that 50-day moving average, and others did too, they just, you know, took it long. And then, you know, then it had this big dump, and then I just sold. Once it broke below the 50-day moving average, I just sold, and I covered, and that was it. That was that simple, guys. That's it. And then literally, once you see that 82 level, right? This is what you can do in theory. The stock dumps, it gaps up, dumps, gaps up. And you see it can't get above that 1758 level, form that lower high, you could take a short. When you see this selling coming in, risking off the 1758 level, you could have, and just rolled this all the way back down. And look where it bounced. It bounced off that yesterday's close price, which is around the 7309 level. And that's how you trade, guys. That's how you trade. I know I spent a lot of time going over these charts, but I'm just trying to give you a sense of how this works, all right? So, you know, that's how technical analysis works, guys. It's just knowing support and resistance levels. This is where Tim Sykes doesn't really give you a lot of, doesn't give you a lot of detail. None of these guys do. And Warrior Trading, forget about it. Stay away, I watch a lot of his videos, but that strategy is going to blow people up. You have no idea how many people have hit me up and told me they've gone broke following these guys' strategies, because they really can't. Because his strategy is more, I think he's a chat pumper. He pumps stocks up, gets in, drives the price of the stock up, gets out, you hold the bag, and he makes his profit, and he looks like, he's just master trader. So, with that said, All right, let's talk about building our watch list. So there's a lot of ways to do it. At night, I run a scan, right? And these scanners, watch the video. It shows you how I create these scans. But you know, you have this criteria here. I have stocks between 10 cents and $40 that are up 300,000 shares. That have a volume of 300,000 shares, up 5%. I hit scan, and we got 80 stocks. All right, that's this scan here. And literally, what I do is I just go through the charts. So I go through the charts. I just click them, and I could just go through the charts. Now, the steel companies, they're all running because Congress passed some sort of funding for like infrastructure or something like that, and that just drove the stocks of the price up. This is absolutely going to be on the watch list tomorrow. I mean Monday, for Tuesday, and I guarantee you that this is probably going to pull back hard because it does. It runs and then it pulls back. It runs and then it pulls back. Now, the other way to look for stocks is if you can go to FinViz and you can go to screener, and then you can go to where it says all, and then in here you can put your criteria. So I could put like stocks under, let's say $50, $40, whatever you want. Current volume, I like to look at stocks with a minimum of 1 million shares, over 1 million shares that are up. I could use 5%, 3%, whatever you want. In the Thinkorswim, I have it set to 5. Here I'll put it to 3. Then it gives you 88 tickers. Okay. And then if you wanna, you can hover over this, and then it's supposed to give you the chart. I don't know why it's not working right now. Oh yeah, there it is. All right, and they can give you the chart, or you can go this. You can go to where it says charts. Then you can go to where it says candle, and then you can hover over these and then look to see, like AGN would be something I would look at, ACN, and then you're gonna, you know, go to the chart, and then you just type the ticker, and then you kind of decide whether or not you want to trade it. That's the other way I do it. All right, guys, so you got both of those. Okay, so all right, so now let me pull this up. All right, so now we're gonna look through the tickers. All right, this had a tremendous amount of value, AKS. Okay, and if you go to FinViz, it'll tell you. I'm sorry, let me just go back there. FinViz and Yahoo Finance will give you more details. So let's say AKS is a stock that I look at. If you literally click there, it'll give you why, you know, it'll give you a link to like why, you know, these stocks are running. Okay, all right, so you can get more information about that there. Okay, so let me come out of this, pull this back up. Okay, so now AKS, all right, has been in this downward trend for a while. Okay, I'll remove this. So what we're gonna do is we're gonna look for potential trades. Now, you know how I like to do it. Okay, so what you do is you put your trend line at the higher day, right? And then what I'm gonna do is I put my trend line. Now I have this set defaulted. The way, if you want to default it, the way I do is you just go to drawings, and I go to right here, price level, right? So and then I put on any ticker, and then what you do is you right click on it, go to edit properties, and then in here you can decide what color you want, the style you want. You can show where you want the value, where you want it to show. So do you want it to show the price on the left or on the right? And I have the right extension on so that it just shows this way, not to the left. Okay, that's how I do it. Then you hit save as default, and then that's how you have your parameters set. That's how I do it. And then so what I do is once I put the ticker on, then I go create. Once I put the trend line, then I go to create alert. And then I put the number, and I put no buy breakout if holds 614, or short the rejection. All right, if it can't hold it, all right, it's a key level. So maybe it breaks above it and runs for a while, but then it starts selling off. And if it can't hold 614, that's a clear entry to short it. All right, because that's a key level. Okay. Now what you have here is you have something called. Let me go down. Oops, sorry guys. That's what I wanted to do. There's a thing called a message center. So let me move this over so you can see. The message center, you should always have this up. So it's a setting. If you come here, I'm sorry, if you go, yeah, it's just that this thing, let me move this over. Sorry guys, that's what this was. If you go and you pop this open, you can go detach gadget, And what I do is like I move it, I put it somewhere, like you don't see it now, but it's on another monitor that I have. And then every time an alert happens, it'll alert me and it'll pop up here, which is how I get my alerts. It's fantastic. That way, when I'm creating alerts, I don't need to watch every stock, because the chart, this will alert me, and then it goes to my phone, and then I can then potentially make the trade based off the alert and whatever notes I put in. That's why I put in detailed notes, and that's sort of how I do it. All right, so that's a key level, right? So now let's look for key support levels. A key support level here to me seems to be right here, 594. I mean, there are some other ones here. There's one here at 601, so we can use that as well. 601, that looks like to be a key support level here, so we're gonna put 601, and then we're gonna put an alert because it's below it currently. It's at 596. What I'm gonna do is create alert. I could say buy breakout if holds 601 or short rejection. Okay, because currently right now the stock is at 596. All right, so this 593 level looks like another key level, so I can say, all right, and it's at 596, so I could create an alert here to say buy the dip if holds 593 or short rejection. Okay, that's all I do, guys. So now I have clear entries. Okay, so that's a key support level. If we look here, right, it's key support level. Got to here, 593 low. See, that's all I'm doing, guys. Key levels to potentially make trades. Now another key level for me here would be there's support. Now you don't have to do it in every single line. I mean, in theory you could, but I like to look at areas where there's a lot of support or a lot of resistance, like this level here. To me, this level here, because it kind of like double topped, and you can see this level here, which is let's see, which is about the 587 level. If we zoom in here at a high here, yeah, 587. You see how it touched it a few times, and then here when it got above it, it kind of like got to that level. That's a key area to me. So this is a real key area. So I'm gonna have a trend line here, because maybe, right, maybe the market opens and it gets to that 587 level, it holds, and then it runs. So I'm gonna create an alert that's gonna tell me, okay, buy potential, right, potential dip buy at 587 or short the rejection, because if it doesn't hold that, then it's probably going to pull back even more. All right, and what do I mean by that? I mean, if it gets to this level, all right, and you start seeing a lot of red print coming in times and sales, you start seeing a lot of red red volume coming in, right, because it's selling, then I'm going to short risk in it. That's all. All right, that's it. And if you notice as it's running, look what's happening. The 50-day moving average seemed to be a support level, and that gave people the confidence to take this long. That's why it's good to have the 50-day simple moving average and the 200-day and VWAP. Key levels. All right. Okay, so these are the seem to be the key levels. Now the other key level that I like here, for me, is this level right here, sort of this 569 level, because you got like sort of this double bottom. All right, and for me that's the last level I'm probably gonna look at. I got fibs here too, this fib and the fibs, but in theory you could put another level here at 579. Okay, you could put another level here at 573, but I like this because you got the double bottom here, so it's like a key level here. If you look at it, it says 569, so I'm gonna use that as a key level and I'm gonna put an alert to say, all right, potential dip buy at 569 level, 69, or short rejection, or short. Really, it's really a breakdown because it's above it right now. It's not a rejection because the price is currently not below it, so it's really more of a breakdown at that point, right? So these are key levels, and watch if unless it goes above 16, 14, and Tuesday and goes crazy, you'll see it kind of hover and make and move around these key levels. That's my opinion. Okay, I have no, there's no guarantees or anything. So let me go ahead and create watch list. We're gonna put some 17, 18. So it's gonna be 17. Tomorrow's the 18th. Monday's the night 220. All right, and the reason why AKS is on the watch list because it held its highs. So it has a lot of volume and it held its highs. Next up, GE. GE's gotten beaten down like crazy. This is really choppy. Now, GE, because it is, all right, a big name brand, okay, I would put on the watch list to see, hey, if only to see if the stock is going to hold 1523. So if it holds 1523, I'll buy the breakout. Okay, so that's the only area I'm looking to buy this. So I am going to put, all right, a trend line there, and I'm gonna create an alert because it's such a big name company. It's been beaten down, right? I'm gonna put buy breakout if holds 1523. Now I don't know if it's gonna do it, but maybe it doesn't. Maybe a week from now it does. But this will alert me when it gets to that level. That's why I love Thinkorswim, and it's free. Okay, all right. So so in theory, if you wanted to, you could look to short it if it can't hold. Right now, it's at this $15 level. All right. So in theory, if you wanted to, you could take a short or a dip buy if it holds $15. Me, I'm just not. I don't really care to look at this unless it gets back to that 1523 level, because you can look at the chart and kind of see where it's in over the last period. So it does have some overhead resistance at 1536. It does have some overhead resistance at 1552, and it started gapping down at 1566. So I would think at least it's going to get back to that level at some point if it starts running again. But we shall see, because it did gap down and it did get up to 1553, and then it completely tanked to 1423. So it's in that range right now. But if you notice, it looks like it's starting to build some momentum again. So maybe it's going to attempt to get back up there. We'll see. All right. So, I'll put it on my watch list just to see if it could get and hold 1523. But if it does, you could put a trend line at this high here just so you can see at 1535, and another one at this high of 1552, just to kind of see. These are key levels to see that it may potentially get rejected off of. But I'll put it on there just to see. Okay, but AKS will be a big play. It'll be in play Monday. Okay, much better opportunity with that stock. And now I'm gonna keep looking. GGB, let's see. Okay, so these are the highest price volume stocks. That's what I'm looking at right now. You could change it and filter by to look at the highest percentage stocks. So this stock GGB is up some, I don't know, some choppy dog shit company. I like these stocks in the sense that that when they pull back, they pull back really hard. So you look at the last year, see where this stock has been. All right, over the last year, this stock has been running. Now look, this stock has just been on a tear of green days, and the volume. It sold 9 million shares 2 days ago, 8 million shares, and now 29 million shares. So it just keeps getting more and more volume. Now I don't know what is the catalyst to this stock, why it's moving, but once it broke this 450 level, it's just been on a run. Now in theory, if you're a short seller like me, okay, you could look to see, all right, if it can't hold 503, you could take it short. Otherwise you can go long. It's really choppy though, so I'm gonna stay away from this, because let's see what other plays there are. All right, CLF, this is a stock that I've traded several times. It had some volume on Friday. You could see it broke out, had this high of 784, gap down, then it found that support at 784, broke out at 799. So what I like to do is, let's see where the stock has been over the last year. Okay, it has gotten to a high of 12 bucks, so we have seen this stock move previously. Okay, and gap down, and now it's on a run. Now I don't know Fibonacci, according to this on the yearly, 810 is a rejection level. It's the 38% retracement level. Could get rejected there. Now it could continue to run. We don't know. I don't know what's causing it to move, to be quite honest with you. I don't know the stats about the company, but I would look at this to trade it potentially. I like this setup. So what I'm gonna do again is I'm gonna put a trend line, and then I'm gonna put an alert. The reason why I put the trend line is because what happens is when the alert goes off, the alert disappears. So at least I have a trend line that stays there. And I'm gonna say, you know, if it holds buy breakout, if holds 799 or short rejection. So if it can't hold 799, if it breaks above it, gets below it, you can take a short on it. All right, that's a key level here. Another key level here for me is 787. So it's above that right now. So in theory, that's considered a dip buy at that point. So we're gonna put, all right, potential dip buy at 787 or short the rejection. All right, so and then we have, right, so we have two key levels there. Okay, this seems to be another key level here is this 776 level, right? Okay, so we look here, see, and it's 776, so that's another key level. So I will put another alert to say, right, potential dip buy at 776 or short breakdown, right? So that's what I'm doing, guys. I'm just mapping out key support and resistance levels for potential trades. Okay, and then the last one here that I like is this level here, because this and we're gonna say, what is this price here? This is what, 761. So we'll create an alert. Right click, create an alert, potential dip buy at 761 or short breakdown. Okay, those are the key levels that I'm looking at for this stock. You know, and you can get a lot more detailed if you want. There's another key level here, 749. You know, and then there's another key level here at right here at 740. So you have other levels, but I'm just gonna keep those levels for now. So we'll put that on our watch list. All right, maybe Monday we'll see a continuation. Okay, let's keep going. AVP, which I think is Avon. Avon has been moving slowly. It's been gapping up. You know, it's choppy. You could, if you want to, put an alert 280 and then maybe potentially take a swing trade. Like for swing trading, you can pull up like the 180-day chart, and then you can kind of see what range it's been in. So it's been a low at 185. It's at a high at 290, and then you can kind of 289, 290, and then you can kind of see what range it's in. So, you know, to potentially make a trade. If you wanted to swing trade this, you know, I'm not going to trade it. Okay, next up, BRX. BRX is up. Like, these are stocks that nobody really likes to trade, but these are the stocks that I love to trade. Because when stocks, you have these clear support levels and resistance levels, you know, when they break down, these stocks give a lot of that back. What I like to do is when I look at the FinViz stocks, I like to look at stocks with gap fills especially. Let me go back to FinViz for a second. Let's go back here. When I'm looking at charts that I'm looking for potential, like for example, I'm going to look at this AMAG because look at this. I love these because eventually when they break those key support levels, you could take shorts on them, and you know, you could look for those kind of stocks. So this is kind of, and this is what we're doing now, guys. These stocks are gonna appear in that scanner for the most part when we look at them. All right, and that's what I'm doing, just looking at stocks like this. All right, but we're just looking through here. All right, so we're gonna put BRX. BRX, yeah, I like this chart. You know, it's had 1, 2, 3, 4, 5 green days. Oh, just so you know, guys, this is the 1 minute time frame again. This is the 5 minute time frame. 2 days, over 2 days I'm looking at. This is the 15 minute and the 1 day. The reason why I'm using 2 days is because I use these Fibonacci fibs and I love them, and they work off the trend. So you look at either the low to the high or the high to the low over the last 2 days. So to set them, like, and I have a whole video on this, so you can just go look at my videos that I talk about how to use Fibonacci for day trading. But come to fibs and you just take the trend. So the trend starts here over 2 days, which is the low, which is 1501, and then to the highs, which is 1594. That's how people use these to trade. I'm off by a penny, but you know, if you fix it, let me fix this. You just right click on it, go 1594, and a lot of people make trades based off these fib levels. Okay, so that's how Fibonacci works. And then, you know, I have it linked so that it comes there. So that's what that is. So let's build our watch list. Okay. So this is a 5-day chart here. Let me remove the Fibonacci. I just wanted to show you how you get those levels. Okay. So let me hit remove drawing. Okay. So what we're doing, right? You guys know the drill by now. 1594 is the high. So we're definitely gonna create a watch list. I mean, a trend line there. I'm gonna put an alert to say buy breakout if holds 1594 or short rejection. Okay, so we have a clear level there, right? We have some other levels here, but the other clear level is this right here, right? Which is, so I want to make sure I got it right, which is low of 1565. So we're gonna put potential dip buy at 1565 or short breakdown. Okay, so we have 2 levels there. Okay, and we have another key level right around here, which is, let me zoom in, which is, looks like right around this level right here, which is that 1577 level. See, that's a clear support level. So if it can't hold it, oops, if it can't hold 1577, you're gonna see a push back to 1565, and if it can't hold 1565, you know, the next key level here is 1553. And if it can't hold that, you know, I think it just, you know, it gives it all back. I mean, these are potential areas where it could bounce, but I think like it'll give it all back at that point. I mean, only reason why I'm saying this is because, you know, you're looking at the stock and it's had, you know, 1, 2, 3, 4, 5 green days. It's due for a red day. If you look at the stock history, I mean, it does. Look here, it had 4 green days and a red day. It had 4 green days and a red day, 4 green days, then 1, 2, 3, 4, 5 green days, and then the big red day. So maybe I think Monday or Tuesday, this is a stock that you look at for a potential short, and this will be easy. I'm pretty positive, easy to borrow. Okay, so these are the key levels. Now let me put an alert at that 1577 level. And guys, you know, you don't have to do what I'm doing in the sense of trading the tickers I trade. What I want you to get out of what I'm teaching you is you gotta find stocks that you're willing to trade and put key support and resistance levels to make trades off of. So that's the key. So we're gonna say potential dip buy at 1577 or short breakdown because it's above it currently. Alright, so there's the key levels. Okay, these are the key levels that I would be looking to potentially make a trade. I mean, in theory, you could buy above if it holds 1587 as well. But I really want to see it break above 1594 to go long. Alright, or get near it to short it. So sometimes you can create an alert, let's say at 1590, just so that if it's on its way there, you can see it, because otherwise you may not even catch it because it doesn't hit your alert. Alright. So, you know, another key level here again is that 1552 level. I'll put one more here. Let's put, actually it's 1550 right here. Yeah, 1550. Yeah, 1552. All right, so that's another key level here, right here, 1552. So, you know, really 1550 would be like a whole number. So, I create alert. Potential dip buy at 1552 or short rejection. All right, so we'll see. I think Tuesday, you know, this stock gives it back, and it doesn't seem like it, but this stock has a lot of volume. It trades with it. These little things don't look like it, but look has a lot of volume. So the getting executed will not be a problem with a stock like this. And I don't know what this is. This is some property group bullshit stock. I don't care. See, I don't care. I just play technicals. I don't give a shit about the tickers. That's I don't really care. I don't really focus so much on news. All right, I really look at the chart and I just look at the technicals and I just make trades based off that because it's all based on human emotion anyway. All right, so let's keep moving. DNR. I'll put like 3 more and then I'll stop the video because I think you get the point, and then I lose you. DNR, nah, I don't like it. This is too choppy. ACH, charts like that. I mean, that not for day trading. You don't look at charts like this. For swing trading, maybe, but not for day trading. Blue Apron, that's too choppy. I mean, in theory, this stock has moved a few times, but see, I'm just clicking the ticker. The ticker is appearing on the chart, and I'm just looking. Stocks that are like choppy like this, I don't like to trade. See, it's just too choppy. It's like the crazy. It's just wild, it's not a clear pattern, so I mean, though in theory, let me put the 1 year. Excuse me. This stock that I've traded before. In theory, excuse me. I thought maybe there was a gap fill because of the way the chart looked. I mean, looking at this chart, if it couldn't hold 2247, you can see this. It may fill the gap below at 2230. So I mean, if you wanted to put an alert here and not put it on the watch list, just to say, hey, if it can't hold this, this can be a potentially very simple short back down to this 2230 level. And why not play it? I mean, if it's an easy short and you can get an easy 20 cents, it's worth it. I'm not putting on this watch list, but I am going to create an alert to say, potential short, and this will alert me at break below 2248 or dip by the dip. All right, why not? I mean, I lose nothing by it, so I have that key level here, and if it holds it, otherwise this thing is going to come all the way back down to that 2229 level at a minimum. So that's not a bad short, it's like 20 cents, easy. Why not? That's a simple, easy trade. But I'm not going to put it on the watch list. Next up, DDR. You know what? This is dog shit and this is choppy. But what I would be looking to do is, if it can't hold this level right here, right? And there's some support here at 77.58, but I like here, this pullback here, really right here, just to be safe. If it can't hold, and really this was the real support because it touched it there twice. I'm gonna put it, yeah, right here, 77.62, 77.61. It's just 1 penny. All right, so I would put this on the watch list only because it has this gap to fill below, okay? And if it can't hold 77.61, even though and it traded 7 million in volume, this is choppy, and I normally wouldn't trade this. I mean, if you look at the stock, over the last, let's see, 180 days, this is a stock that's gotten as high as $9, and it's had these runs. But the thing that draws my attention is because it would be such an easy short if it couldn't hold 761, because there's nothing below it other than this bullshit 1 minute candle. I think the real support is here, 738. So I think if it can't hold 761, this gets back to 738. So that's it's 30 cents of upside, and it would be such an easy short. So I am going to create an alert to just say at some point it's probably going to give it back. So I'm just going to say potential short at break below 761 or dip by, because maybe it holds, but I don't think it will. So I don't know what's gonna happen, but I'm not gonna put it on the watch list, but I'm definitely gonna leave that there just to alert me if and when that happens. Let's keep moving. Next up, HST. It's too choppy. All right. BMPX. FXA. And so I'm looking at it. I traded this several times. This thing has a, gives it back a lot. It's really choppy. I'll look for other stocks. HL, CYH. I've traded this several times. Now look at this. And this stock has a tendency, when it moves, man. It moves for days. This stock could run for days. I've traded this several times. Let's put up the daily. And yeah, it gapped all the way down to 385, but it's been on this run. 639. Look at that fib right there. It's at that level. It might get rejected, but this was a stock that was as high as $10. And and when it moves, it can really move. It's had 1, 2, 3, 4, 5 green days, so you gotta expect that it's gonna give some of that back. So let's pull up, and it did have a wash, but it's holding this key level, so this 599 level, so it's at 606. So what I would be looking is for a potential dip buy and a continuation, or a complete sell-off back to this at least 575 level. So right now it's at 606, so maybe, but if it could break above 609, because you have all these short sellers holding, is that it looks like you didn't get an artificial spike, which is telling me they're still holding, thinking it's going to continue to sell off. But if it can't break 599 come Monday, guess what's going to happen? This thing's going to have an artificial spike. So I'm definitely going to, Tuesday. So I'm going to put this on the watch list, and we're going to put some key levels here. I like this chart. So we're going to look at CYH. And okay, so let's put our key level. So 599 is what? 590. This hit a low for 599. So we're gonna put an alert. Sorry, picked the wrong thing. Potential dip buy at 599 or short breakdown. All right. Okay, so that's one level. Now the other key level is this, looks like, we're gonna see right here, 609 level. Actually, what's high is this? 609, 610. Yeah, we could use this level right here, 610. There's a lot of overhead resistance up top. But if it can hold 610, if it can break above 610 and hold it, that may be an area to go long, and it may just start running again. The key level for me here is at 599, 610. And at least on the way up, I'm looking at 610 potentially if it holds. So we're gonna create an alert, either short rejection of 610, so short rejection of 610, or buy breakout if holds. So I think that maybe it might start to run, but you gotta be careful because there's a lot of overhead resistance. Really, for me here is that key is that 636 level. So if it gets back to 636, right? So we're gonna say buy breakout if holds 636 or short rejection. Okay, so that's a key level for me there. And the other key level for me here is if it can, there's a lot of support here at this 590 level. So what I would be looking to see is if it can't hold 590, then you're gonna see this thing, you got some support here, 586. So these are some other key levels here, okay, so to potentially look at. So we're gonna put two other alerts at 590 and 586 for potential entries. Okay, potential dip buy at 586 or short rejection. Now really, I'm not gonna even put short the rejection because I want to see it break below 590, 586 to me would be the area where I would take a short. Now maybe a potential dip buy 586. So we'll see. we'll see. Those are the key areas that I would potentially look into trade this stock. Let's see. We'll see what happens. All right, so that's CYH. Oh shit! I think it removed the stock. This Thinkorswim, man, it's terrible. It does this a lot. Where we had, all right, we had CLF, CYH, was it DDR? No, we had GE. Crap, I have to go back and double back and see. I think it took a stock off my list. That's okay. All right, so I'm gonna just look at one more, and the other one I'm gonna look at, I'm not gonna just literally click on every ticker. I know the other one I think that was moving because AKS was moving was X, which is a steel company. Now this is more higher price stock, but Jesus, yeah, it's a glitch with Thinkorswim. It like removes that. Look, so this is a stock we're gonna be looking at. Even though it's higher price, you gotta play what the market gives you. So we're gonna put X on there. I'm gonna put X, and again, you know, you can search for it. Probably will pop up on my FinViz. Let me just to show you. Ah, shit. And this is why, you know, looking at charts can be time consuming because you got to look through the charts. This saves you time because if you see stocks that are holding their highs, then you go look. And I'll look at these later, but you know, we look at these and X should appear. Oh no, X is 50. Did I say? Yeah, here's the second one. And you know, I'm gonna look at other stocks like Mule's definitely something I'll look at. Roku is something I'll probably look at. Run is certainly something I'll look at because it's, you know, it's up 3 days and it's up a lot. X, there it is, you see? So I would have found it at some point. So just so you don't think I'm cheating you guys. So, all right, so X is at 45.44. We're gonna create an alert. Buy the breakout if holds. Buy breakout if holds. 45.44 or short rejection. All right, so this is what I do, guys. This is all I do. I know this can get boring, but this is what you got to do. This is what you got to do. And then you got a clear support level here. So right here. So I would, you know, zoom in. I'm sorry. Let me pull it up on the big chart. Sorry, guys. Okay, 5 day 1 minute. Oh yeah, I got it up. All right. So we have some support here. 44.36, but I like this support level here, so I am going to put it right here, which is that 44. The high is 44.02. I have 44.03, and right here is this says 43.97, 43.95. So this is some clear levels. So I'm gonna put an alert here at 44.03. Potential dip buy at 44.03 or short rejection. All right, so there you go. That's a clear area of support for me. All right, you got this little window below it. All right, now also, yeah, because it's right around. It's at right now 44.35. I mean, in theory, that could be an area of support. I mean, it's not a lot of volume here, but 44 low, 44.36. Yeah, so we can put it there if we want. All right, we'll say create an alert. We'll put 44.36. Because it's kind of holding that area. Potential dip buy at 44.36 or short rejection. So what I expect Monday is the market's gonna open. This thing's gonna pull back hard, and then, you know, if it's really bullish, people take their profit and then it'll run again, and it's going to it's going to oops, so remove that, remove join. It's going to then maybe continue up. We'll see. If not, we'll have a monster short, and you can short it off that 44.35 level. If you can't hold 44.03, you could take it short there. All right. And, you know, now you have some other support levels here, some clear support and resistance levels. So Here's a level right here, so 44.39. I'm not gonna put the alerts now. I'm gonna pretty much end the video, but I'm just showing you. Here's another key level. So I would put trend lines at these levels. And if you're watching the stock, literally, you don't have to put an alert for each area. I do because I'm not always watching the stock. But these are key areas that I would potentially be looking to make a trade on this stock. And trust me, everybody else is doing exactly what I'm doing. Anybody who's smart, a smart trader, is doing exactly what I'm doing. And they're going to create potential areas, you know, to potentially make a trade on the stock, you know. So this is what people do. This is exactly what people do to figure out where they're going to get in. And here you got a lot of support and resistance areas where, you know, you could potentially make a trade. All right, and these are the key areas, and this is what you got to look for to potentially buy or short a stock. All right, folks. So this is what I'm doing. This is what I'm doing. You know, I'll continue. I'll put a final list on Twitter. I hope you found this helpful. This was really long, but I was trying to get you to understand the psychology of trading, of why you make a trade. Like, you know, and looking at volume, okay, looking at level 2, looking at time and sales, looking when a stock holds a trend. So if you see a stock like this and you see it's holding this support level, you can go long, risking off the support level. If you see a stock gap up, pull back, and hold an area and it can't get above it, you could take a short, risking that area. If you see selling pressure coming in, you see like a stock forms like here, perfect. Here's the high, can't get it, forms a lower high here. The next candle's red right here. You could take the short, risking high because you see selling pressure coming in. You know, like that's sort of how you make trades. But the key is is to have all your levels mapped out so that you're focused on the stocks that you have on your watch list, and you're not